Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday the 20th of October, and not a pretty picture. We've fallen back below the 50-day moving average, 75.10, failed at the 200-day line to start the week, and now we're risking a break of this uptrend line from August. That's around the 74.60 level. Below that, we're looking for potentially to go as low as 71.50, which is the floor of that falling trend channel from back in February, which is blighted the market since that time. End of day close back above the 50-day line. Maybe we can breathe a sigh of relief, but at the moment it does look as though this market is actually rolling over, especially after all those multiple failures at the 200-day moving average 76.50 that we've seen so far this month. Moving on to the DAX, and the DAX has in a way been the leading market on the downside, and here we had that falling trend channel there from back in May, and to add insult to injury, we've actually gapped down below it. So the market's seen it and decided it doesn't want to be anywhere over 15,000. Initial support here, 14,800, but difficult to see how we can avoid a meeting with the March support and old November resistance from last year around 14,400 before this market gets its act together, and below 15,000 really we're expecting the downside. If we can close back above 15,000, then the best at the moment is 15,500, but that seems a long way away. Moving on to the Dow, and it's a similar picture, I suppose, to the FTSE. We're a day or so behind in terms of where the Dow is compared to the FTSE, but the same pattern of failure at the 200-day line there at 33,800, and the likelihood of a test, or the test of the old November uptrend line, the floor of that rising trend channel from the end of last year, 33,000, before this market can rebound. Worth looking at gold next, in the sense that here we have had a breakout through the top of that falling trend channel from back in March and through above the 200-day line, the black line there, 1945, above 1945, looking for up to 2050 by the end of next month at the top of a broadening triangle from May this year. Nice little rebound above the or at and above the 50-day moving average earlier this week to start the breakout that we've seen. Moving along to crude oil, which is also worth looking at the moment. We've got this rising trend channel in place since May. We had the dip before the Middle East disaster started. A rising trend channel floor around $85, as is the rising 50-day line, so above 85. Looking for up to $100 by the end of next month, and one shudders to think what would deliver that on a fundamental basis. Rising 200-day line as well, so the RSI above neutral 50 and the whole setup there looking very strong indeed. On to Bitcoin, and here you can see that we've got an ongoing rebound off the 200-day line there at 28,000. Call this a V-shaped bull flag, nearly up to the $30,000 area, and that suggests that we should get up to the top of that rising trend channel from the beginning of the year. 34,000 over the next couple of weeks. We were previously looking for that by the end of next month, but the way things are going, we might even get that by the end of this month. So a big development there for Bitcoin at the moment. Finishing off the major markets with pound dollar, and here it's amazing to see that this market's on the right side of $1.20, but the main neckline there around $1.20.40. Above that we have buy on dips rather than sell into strength, but there is a risk that if we break that 120.40 area, we could head to the floor of that falling trend channel from June as low as $1.19. On the upside, 122 looks like the cap on price action, especially after the failures we've had below the 50 and 200-day moving averages. Moving on to the stocks, and not too many today, as you can imagine, with the way the FTSE is. Sentiment rather crushed. Interesting to see the state at Atlantic Lithium briefly broke through the 200-day line and our initial target there at 28 pence. But above 28 pence, we are looking for up to 40 pence by the end of next month. So let's see if it'll be second or third time lucky getting through that 200-day line. We haven't been properly above that since back in February. Obviously, the rug was pulled in March on the shares. On to Beacon, which has its fans at the moment, and you can see probably from the chart that they might start to get excited again. We've got a rising trend channel there from back in April, bounced off the 200-day moving average at 0.14, And we're looking at the top of that rising trend channel as high as 0.34 by the end of the year. Obviously, the key here is to break that neckline resistance around 0.19 over the next week or two. 50-day moving average rising sharply, so that's a positive as well, as is the uptrend line in the RSI window. But 0.19, then obviously retesting September resistance at 0.27, but the big picture target there as high as 0.34, which sure will cheer some people up, especially if it happens. Moving on to East Imperial, and here we've got another attempt at breaking through the 3 pence area. That was the target that we had before last month. We have another go at 3 pence, hopefully by the end of this month. Above 3, looking for 4 pence, which is a December resistance line projection from last year. Just also waiting for that 200-day line to start rising. The 50-day line is already rising sharply. Moving along to Eurasia mining, which never got through the 3 pence area that we wanted it to do. In fact, 3.25 is what we were looking for. The 200-day line currently around 3.2 pence. Still seeing the shares making marginally new lows, which they did during the week. But the key here probably, at least in terms of a potential recovery, would be to see the shares above the 50-day moving average of 2.75 pence. That looks now like that is the ceiling on a recovery, or a potential recovery, for the stock. Been a rocky ride for Good Energy, but at least it looks as though it's resolving on the upside. We had the target there at the top of that broadening triangle from this time last year as high as 256 pence, and we're not too far away from it now. V-shaped bull flag suggests that we might actually head higher than that, so the target there would be rather greater, and could be up to the £3.20 area if we can get through to the 258, 256 area by the end of this month. Support ideally around 235, which was the old resistance back in April. Moving along to Hummingbird, and here the progress after the interview earlier in the month, and then obviously the gold price, as we've seen, looking very healthy. We've got the rising 200-day moving average above that, and above that May resistance line at 11.5 pence. We're looking for up to 16 pence now, which is the top of a broadening triangle from back in July. Ideally, the shares stay on the right side of 10 pence in the interim. On to a stock which has announced a bumper contract today, and a bit of a head scratcher that, a bit unfair I think probably, as far as Harland and Wolff is concerned, but it looks like we've got a rising trend channel base. We have gapped higher, so the effect here is a bear trap gap reversal from below the September support around 11.75 pence, above the 11.75, looking for the 200-day moving average at 14 pence initially, maybe by the end of this month, and then up to 20 pence, hopefully by the end of next month. So a bit of a punchy call there. Let's see if the shares can deliver on the bullishness. Moving on to a stock which I called higher a little while ago, Intercede. The initial target here up to 61 pence. If we can get through that, which it looks as though we might be able to do, then the next level up could be as high as 74 pence, which is the top of a broadening triangle from back in March. The positives at the moment, apart from the trendline break, were also the unfilled gap to the upside. That was a bear trap gap reversal, which tends to work, and also the bullish divergence that we had with the lower low for October, but higher RSI trace. So breaking 61, 62, looking for 74 by the end of next month on Intercede. Onto a stock which has rebounded, I suppose, from the bottom of its range, Panthera. And here you can see that we've got just a bear trap rebound from below the 200-day moving average at 6 pence. Above that, we're looking for the stock to zigzag back to the top of the range around 11 or 12 pence by the end of next month. And it's a bear trap rebound from below the old June support there, helping the shares along. On to Phoenix Copper, which must have been, or must be, one of the better calls of the week. Here we've seen the bullish divergence, so around 15, 16 pence. It looked as though there was a potential turn there, and initial target was the old support, 18.5, and then after that looking for 25, 26, which is a resistance line there from March, and also the area of the 200-day moving average. Best case scenario is that we're up to 34 pence by the end of next month, which is the top of a broadening triangle from March, and we would like to stay on the right side of 18 pence in the interim. Moving along to red rock, and here it looks as though we've got a bull flag near the lows, a bear trap from below the old support there around 0.12. Above 0.12, looking for initially the 200-day moving average at 0.19. Best case is 0.32 maybe by the end of the year, but that's obviously a rather volatile situation. One of the best movers of the week has been quantum blockchain. Just a bear trap rebound there from below the old support there from December, 0.85, and we've rushed ahead. We've broken a line of resistance there from June at 1.25 and above 1.25, looking for 1.9, which is the main 2023 resistance line. Best case for fans of the shares, maybe by the end of the year, up to 2.4, and the peaks of 2023. Serabi is next, and this has been one of the more smooth bullish situations. Here we have a situation where the stock has managed to push through on the target we had. We had an initial target there around 37 pence. Above that, we are looking for up to 42 or 43 pence, hopefully by the end of this month. Finishing off with Wishbone, which has also responded to the improved gold price. Here the main block is the 200-day moving average around 2.75 pence, but if we can get through that, then the hope would be that we'd head up to around 4.25, which is the top of that rising trend channel base we've had since back in July. That's it for me today. More updates tomorrow.